Crypto, brought to you by FAS, Flashback.One, and Computecoin Network, where we cover the latest in crypto news. We're talking to Elena Obukova, and I have my questions ready, so let's dive right in. So Goldman Sachs offered the first Bitcoin-backed loan. Such a loan allows for a Bitcoin holder to borrow fiat currency, such as the US dollar, by fronting up their BTC as collateral to the bank. The underlying volatility of Bitcoin can make these loans risky. If the price of Bitcoin drops too far, the borrower may be required to increase their collateral, otherwise they risk getting liquidated. So my question to you, Elena, would be, does this reward outweigh the risk in these types of loans, and how do you think they will evolve over time?
Well, first of all, when we're talking about asset-backed loans issued by different banks, we need to understand that whenever a bank are using or allowing a borrower to use a physical asset as collateral, it's a riskier type of transaction. And usually banks are the ones who are bearing this risk. And of course, no one wants to lose money, and especially banks who love having lots of money. So banks will always value your physical asset at a lower price. So whenever they're giving you any money loan, any cash money loan, there will be a lower funds compared to face value of our physical asset. And now when we're talking about cryptocurrency, and lots of experts were saying that it's a risky transaction, bank will be bearing some sort of risk, but I see actually a great opportunity for Goldman Sachs to get access to a lot of liquidity. When we're talking about investment banks, every single transaction is heavily overseen by SEC. So banks cannot really do much of crazy, risky transactions without SEC knowing about it. Cryptocurrency gives them slightly more freedom, and whenever they accept Bitcoin as a collateral, it gives them more liquidity. It gives them actual liquid collateral. When we're looking at example, for example, a borrower leaving as a collateral their house or their car or whatever other physical asset that is not as liquid as cryptocurrency, for bank, in case borrower decided to go to default on their loan and unable to pay it back, the bank now have to deal with this physical asset, resell it just to get their money back. But in case of cryptocurrency, of course, it's completely completely different situation, because they don't really need to deal with any liquidation of an asset because it's already liquid. We also understand that Bitcoin has a longer potential. Bitcoin is a deflationary asset that is increasing in value. So for a bank, it doesn't really make much sense to go and sell it into fiat currencies that are just becoming worthless day over day. And at the same time, having access to Bitcoin collateral, investment bank now can access other cryptocurrency opportunities. They can call to DeFi markets. They can do some other riskier short-term investments. They can do also leverage trading with this Bitcoin as a collateral. At the same time, having less transparency and less restrictions from the SEC. Just of course, these transactions are more liquid and maybe slightly harder for SEC to trace. At the same time, I talked about blockchain to be very transparent, but unfortunately, or fortunately for us, the government doesn't have really a system in place to yet monitor these transactions as much as they're overseeing fiat. So it gives Goldman Sachs right now more opportunities to benefit from cryptocurrency markets using Bitcoin collateral money for their transactions, and at the same time they don't need to deal with physical assets that also can go can get lower in the price over time, even if we're talking about apartments and like any other real estate. We have a housing crisis, and then real estate costs way less, so a bank will still bear this cost and bear this risk. With cryptocurrency is completely different, so I see it's a great opportunity. Unfortunately, there is not much information about it yet, about like specifics on this transaction, on this Bitcoin-backed loans or the Goldman Sachs issued. I only saw one article that was just republished by every single crypto and non-crypto media. They came from Bloomberg. But yeah, I guess we will need to see what's happening there. But it's definitely a great opportunity to get access to liquid assets for investment banks.
I feel like everything's kind of risky, so that was interesting to hear your take on that. On the same kind of coin here, if you will, Fidelity, the investment firm, allows customers with a 401k account to invest a portion of their account funds into cryptocurrency. So we're seeing like retirement funds coming into this. This is exciting news for crypto moving forward. What are your thoughts on this? Do you think it's all positive, or is there any concern?
Well, I don't really believe in pension saving accounts and some investment companies overseeing, especially like crypto assets. I simply don't believe in it. Why would I pay? Why would I pay money to some company to store my Bitcoin for me and pay them some percentage? Doesn't really make much sense. So how Fidelity is working, they're giving you a subscription-based plan where you can choose what kind of assets you want to allocate your funds to, and every month you're automatically deducting your like part of your salary, and part of your salary is going to this saving plan. There are some opportunities if we're talking about the US citizens and tax breaks. So obviously people can enjoy the tax breaks that coming with it, and now cryptocurrency can be a part of this package. At the same time, I don't want someone to store my Bitcoin for me, so I would rather not enjoying this tax break, but have my Bitcoin secured at a cold wallet where no one can access it. So there are some benefits. It definitely gives larger exposure to a general market, to people who are outside of crypto space, to start exploring Bitcoin and cryptocurrency market opportunities for their saving plan. But I at the same time don't believe in these plans. I believe in taking ownership over my cryptocurrency, over my investments, and I don't want someone to get to have access to it. At the same time, yeah, if we talk, I don't believe in the taxation the way it's working right now. So it's completely different question. And on top of that, I wanted to add that pension plans, different investment companies, they are interested in the cryptocurrency. And again, we're talking about deflationary mechanism that cryptocurrency, most of cryptocurrencies have, and especially Bitcoin. And in this case, of course, your value will be growing organically through time. Bitcoin has larger long-term value compared to many financial products, and there is like not a single doubt why they're trying to explore these opportunities. They simply cannot miss them out.
For everybody who's been listening to our previous This Week in Cryptos, the reoccurring message from Elena is hold your own cryptocurrency.
Absolutely. I mean, that's the only way. Like, You can't give your assets to someone else. Whenever someone has access to your account, this account doesn't belong to you. Your assets can be seized, or they can be stolen, they can be taken from you. So just, learn a lesson. I don't trust investment companies. I want to do my own research. I want to do my own decisions. I want to do my own investments, and I want to own my own funds. That's that's the logic here.
Own your own funds. The next question I have is about a payment app. So following the announced integration of the payment app Strike with e-commerce platform Shopify to accept Bitcoin through the Lightning Network, the crypto community raised concerns over the legal implications to Move. Crypto researcher Matt Altborg believes that the event is a very significant development for BTC as it allows the offloading of BTC without the need to go through the know your customer process where you give your personal information. However, lawyer Kevin Thompson pointed out in a reply that the event is likely to make regulators frustrated. Being able to spend BTC without going through KYC enables users to dump BTC and avoid taxes. He predicts that the regulators may respond to the event by creating reporting requirements for Shopify. So I thought this question was kind of interesting because I was wondering how different shops were going to use cryptocurrency. So what are your thoughts on this?
I love whenever something makes regulators frustrated. I think that's my favorite part. When we're talking about Shopify, and we actually were exploring it recently for Supermoon camp, because we will be setting up our merchandise store, and we're also selling some artworks from our community of digital artists. So we had been also researching their offers just recently. And when we're talking about cryptocurrencies, and Shopify, I believe, has more I would say down to earth definition and description of what cryptocurrency payments are about. And that obviously will be very a stepping stone, bringing merchants into our crypto space. Of course, now they will be able to accept peer-to-peer transactions. But the interesting point that Shopify brought in their description and section about cryptocurrencies are the chargebacks. So how it works right now, if you are a merchant and you're selling some goods, some product, service, whatever you are selling to your customers, they purchased it, and they still have a right to text their bank and say, hey guys, I was charged this amount of money, but I never received this item. And in majority of cases, people just do it out of, I would say, they just don't want to pay. They received the goods, they received the service, maybe they weren't satisfied, and or they forgot that they were having subscription, so they will just reach out to their bank and say guys, I don't know what it is, please deal with it, we want our money back. And then bank is going to a merchant, and whether it's doing an inquiry about this transaction or it's just doing a chargeback. So bank has the power to take this money from a merchant and give it back to a customer. And then merchant needs to spend additional time to appeal in this process, to explain that the service or product was delivered, and in some cases it's very hard. And I remember when we were helping with ticketing to another event organizer, we had multiple chargebacks that we had to deal with. Everything was solved on our end, but then PayPal came in the game and started asking us for additional verification of services, and we were selling NFT tickets. I don't think they even understood what exactly we were selling. They were saying that we need a proof of transaction, and I'm saying here's a proof of transaction, here's a blockchain transaction. Here's the actual wallet where a person receives their ticket. But for PayPal, it's something completely crazy. They don't really understand it, so they're saying like, oh, it never happened. We don't have official invoice. It never happened. So merchants have to deal with a lot of headaches that are related to chargebacks, and it's really, really unfair. Why are we trusting banks to play a role of arbitrator in all these like discussions and all these disputes? I simply don't understand that. I don't think a bank should play such a role. I think it should be between the merchant and the customer. And the cryptocurrency payments are actually enabling to make this transaction more transparent, and you will not be charged randomly as long as you, again, storing your funds secured, you're managing your own crypto, you know how to use it, you will never be charged for something you didn't pay for. It's just not gonna happen. So you don't need to reach out to some other third party and complain that you've been charged money for a service that you never purchased. You're always gonna be charged for something you actually purchased. A merchant doesn't need to go and deal with all these disputes, with all these resolutions, and spend their money, resources, and time to deal with such issues. So I think that will be a very game changer in the e-commerce, and it will help our merchants to do their business faster, more efficient, to take money in a moment. They also don't need to wait for a bank to process their funds. That sometimes can take a few days, sometimes it can even take a week for a merchant to receive an actual funds. They will receive the funds in a moment. It's that simple. And on top of that, we have very low commissions. They're planning to use Bitcoin with Lightning Network. Just compare a commission to a bank transfer or bank transactions when they charge you 2, 3, 5%, sometimes even 10% to simply pay with your bank card. Bitcoin Lightning makes our commissions extremely, extremely low. You have a fast transaction time, and you're removing a middleman who we don't really need anymore. I think that's a beautiful step.
So Fort Worth, Texas passed a vote for the city to mine Bitcoin. So Texas is the first in the US to mine. Do you think that we will quickly see more places mining in the United States? Any other thoughts on that development?
And I always like to say that Texas is not really the United States. I mean, it technically is, but Texas likes to do whatever they want, not listening to anyone else, and that's why we respect Texas so much, and that's why we see a lot of better laws in the crypto sector, more companies moving to Texas, crypto companies moving to Texas. Of course, it's just friendlier for business there. I wouldn't expect other states to start mining Bitcoin at least anytime soon. Maybe Florida. Florida is kind of behaving like Texas recently, maybe even more. Texas in Texas. But yeah, I definitely see, I mean, it's a great opportunity also to get, for a state to get access to funds that are independent from United States. And I know there are a lot of experts, a lot of people, and a lot of also supermooners who believe, who don't believe in one united currency in the United States. Meaning that United States dollar shouldn't be a standard for all the states, and states can have their own money. And I like the points that one of my colleagues is bringing, is that it was never easier to start using your own currency, to start actually creating your own currency. And I think Texas also has some thoughts in that regards, and that's why they started mining Bitcoin, just to have access to independent money, to something that will help them to get more power over decision-making process, and also not storing United States dollars that is just being inflated every single day when we have a crazy printer working so hard to make it happen.
Definitely Texas is a place of its own. So my next question was something that I saw coming from the community, really, the larger community across social media. I saw a shift of people talking about, profile picture projects and communities opposed to, the one-on-one artists. And I wanted to talk about that a little bit. So how can more one-on-one creators, people making like those just one unique piece of art and sending it out there, the kind of like the artists, how can they leverage the NFT space more? And do you have advice for those individuals who are trying to put, artwork out there or a project out there, but they don't have teams?
I was actually talking at one panel in Miami on how to build your music brand in the metaverse, and we were touching that issue. So at the very like beginning, like if we look just at the standard like music industry, how it works. It is so hard for independent artists to become famous and get access to a larger audience. If you look at all celebrities who are so popular, famous, they're all coming from money. Like they have wealthy families, they have connections, they have resources. They're not coming like out of nowhere and just becoming famous. No, there are a lot of money behind that, and a lot of connections. You cannot just, same like with Hollywood, you cannot just move there and like become famous without knowing right people, without going through all this crazy madness that we're hearing about Hollywood. And I was thinking that NFT and metaverse could give a larger opportunity to individual artists to build their brand, get access to people who would appreciate their art, their music, and whatever else they're creating in the space. So they will be able to build their own community without putting that much resources. But it's actually not completely correct. If we just looking at it from a basic perspective, when you're purchasing some product, this product always have so much marketing behind it. That's why you know about this product. That's why you're buying this product. And it's the same with the music. You listen to specific music that was promoted to you, that you heard somewhere, you like this song. If you never heard this song, you don't know it exists. And that comes marketing. And of course, our individual artists, our musicians who are trying to put their work out of there. They still have to go through some initial investments, or whether it's building a personal brand so people can know about them, help them to share, spending money on marketing, building some initial community of people who will appreciate their work and will be able to help them to promote this work. Of course, there are always exceptions. Video can go viral. You can get access to people without much of initial investments, but that would be a rare case. You still have to spend a lot of hard work and resources in order to build your brand and get access to a potential community that will appreciate your work. However, I think it's still easier in the NFT space, and with metaverse becoming more popular, I believe individual artists will have greater opportunities to get access to their potential community and to people who will appreciate their work. And Supermoon will be hosting another panel on our music industry and how we can support artists and how individual artists can build up their brand even if they don't have much resources. We want to host this panel very soon, and I will invite also one of my friends who is a musician, and he's also trying to go through all these challenges on building his brand and getting access to people who will appreciate his music.
I also think there's like a time thing sometimes where You might sell one and then it might be like 6 months later. But I feel like with Web3 or the NFT space, it's so fast that people expect things really fast. And sometimes that might stop people from actually continuing on when they might make it if they just like kept pushing for another 6 months, if that makes sense.
Yeah, I completely agree. If you look at their crypto Twitter, I mean, it's just madness. I don't know like how like people finding time. Like they're just tweeting every day, a few times a day. I don't have that much time. Like I barely can look at my Twitter like maybe 2-3 times a week when I'm like receiving some notifications because I'm busy with my projects. And now, like thinking about musicians and artists, it's not really different from them. Their project is their artwork. They're putting so much efforts in building, like I don't know, like creating like a cool music. And on top of that, now they have to spend so much time on social media to promote it, to chat with people, to maybe appear in the Twitter Spaces or any other communities, so people just get to know them. So I'm a big fan of collaboration approach, and I always recommend if you're building like a music brand, find someone who can help you with the marketing side. Crypto communities really often people are willing to help each other, and I think it should be way easier to find someone who believes in you, believes in your brand, and you can start this brand together. Just with you focusing on something that you are so passionate about and something that you're truly good at, and let another person, your partner, focusing on what they're good at, marketing and helping to promote this brand. All the big labels are not happening with one person who's writing music and then doing marketing. No, there is a huge teams of people who are helping to pull everything together, and that's a competition. So we always need to think about it. Great projects are not happening with just one person. There can be one person who is creating initial idea, creating initial work or project or like artwork in this case, but we have a team of people who are making it happen. A team of people who are making it to reach the audience. So I think that's kind of a point that we're missing when we're just throwing our songs, artworks, and expecting people to pick it up, and you just are becoming famous in one moment. No, there's always the teamwork and hard work behind every successful project.
So the other thing that I wanted to talk about, which happened last week, was something with Bored Ape Yacht Club. And so people, like, there was this huge rush, all this news on Twitter, every single person was talking about this. So there was a mad rush to buy Otherdeed NFTs over the weekend, which spiked gas fees on the #2 crypto network, Ethereum's, and burned 55,843 Ethereum in the process, worth approximately $157 million, making it the sixth largest source of burned ETH ever. And I thought that was just so crazy. So did you want to talk about that? And do you think that that could be prevented, or what are your thoughts on that?
First of all, yeah, let's start with the madness with the Bored Apes Club. Like whenever someone hears apes, bored apes, people just going crazy. It's a really hyped up project. They have so much funds now to accelerate their marketing even more. And Yuga Labs that is behind Bored Apes Yacht Club now introducing a new project. Of course, people want to buy it, and people like majority of people don't want to buy it just because they see some specific value and they want to store those NFTs or this digital lands, and they want to use it later in their metaverse. No. They want to speculate because they know that other people will be rebuying it. Other people who also want to speculate, who want to join the hype. That's not like when I'm always talking about NFT projects and saying to people, please create something with their long-term value, with their long-term opportunities that would be still valuable outside of NFT. something that people will appreciate. And I think that's a quite important part. And when we see Yuga Labs, I know that they're adding more functionality, more utility to a whole project and everything that they're trying to issue. I still believe that they were so lucky, and because they were, I would say, front runners in a space. That's why obviously they became so lucky, and their NFTs went crazy in price. That of course we're not gonna see like happening with other projects that have same roadmap as Bored Ape Yacht Club. And right now, yeah, people just going crazy because they want to speculate. It's not like a healthy project development. It's just a pure speculation. Speculation always ends at some certain moment. So we will see it in the longer term. However, I'm still quite excited to see the upcoming updates, see the metaverse and what the guys are building. I'm pretty sure with all the resources that they got from all their recent sales and with ApeCoin, they have more than enough funds to build a really great project. And talking about Ethereum, that's another point. Ethereum was, I mean, it's one of the earliest blockchains, and they never expect that this kind of madness will happen. They never expect that in 2022 there will be a group of people issuing ape JPEGs and people going crazy about this project, and whenever they release something new, people going nuts and start throwing their money in. Some guy paid like $14,000 in the transaction fees, like in the gas fees. It's insane. And yeah, obviously Ethereum never thought they will need such scalability. They never expect such a big adoption, at least like for like years coming. Ethereum wasn't designed for this fast and this number of transactions happening on the market. That's why we see problems. And I know that Ethereum trying to add, like they're trying to update their platforms. They try to see how they can add more scalability. But at least, like for time being, there is no scalability for Ethereum. It still works. It's still their only blockchain that works at every single layer that we're talking, like that we can imagine. If we're talking about smart contracts, we can rely on Ethereum in terms of their functionality, but we can't rely on it in terms of gas fees, in terms of transaction speed. Unfortunately, that's not how they were built in the beginning, and that's why we saw like a crazy amount of Ethereum being burned. They also didn't expect that this kind of madness will happen. And that's another point that I was talking about, building smart contracts, building DAO, building any other blockchain. You have to foresee in so many different scenarios in the future how the industry will be changing in order to build it right, in order to build the right architecture. And if you just look at any like big tech companies when they build their first platform, it will be way different from what they have right now. Because initial architecture, initial functionalities that they built was horrible. Because they were trying to put something out there on the market that will work, that will serve specific need, and then they realized that the need is larger, there are more people that need this solution, they need it faster. There are so many things that they didn't even imagine when they were building initial architecture. That's when projects started rebuilding their architecture to make sure that they meet their new demands. And in a few years, they can be rebuilding their architecture again because they simply realize that, okay, like we again didn't think about this 100 other issues that can happen, that people need, the market is changing, we need to build it. And when we're talking about blockchains, they have so much functionality designed from the very beginning that cannot be really changed. How we can imagine scalability coming at one of the first blockchains, the blockchains that introduced smart contracts that didn't even know how smart contracts will be used in future. They didn't even imagine how many applications will come along with smart contracts. They built something that works, it served the purpose, it just wasn't enough. And yeah, that's what's happening.
So right, they didn't expect people to be having madness over apes when they created it.
I think they were first shocked when people were going nuts about CryptoKitties. That's the first time, like, and I remember, like, my friend, he's a blockchain developer, he was saying, Elena, I still remember that, like, that days, like, I hate CryptoKitties so much because we're testing our project and we had to pay so much money in gas fees because we had to actually like launch smart contracts, do transactions just to test out our financial product. And people were going nuts about CryptoKitties. It increased gas fees on Ethereum, so all other developers were hating on the CryptoKitties. I think that's the first time when Ethereum community started thinking like, well, I guess something wrong with this world. People going nuts about JPEGs. They're willing to spend so much money on transactions. And maybe there are more applications that we initially thought about. So yeah, every project experiencing that, and blockchains are not an exception.
Last question that I have for you today also has to do with Twitter, which is another thing. I really didn't picture Twitter being the hub of NFT news, but it's kind of interesting how that social app has developed over time. But Binance, the world's largest cryptocurrency exchange, has committed $500 million to Elon Musk's $44 billion bid to acquire Twitter, according to the updated filing with the SEC. So why do you think Binance is kind of backing the Twitter buy? And do you think this will be positive for crypto Twitter and the overall move towards what people are calling Elon Musk's free speech?
Binance is a large company. I would call them an institution in the cryptocurrency space. They still need to do investments. They have a lot of cash. Exchanges have so much assets. They have so much money in revenue. That's why they're also doing investments. They want to grow. They want to put their cash somewhere. And obviously they're looking for other projects and they need to diversify their investment portfolio. Well, let's look at Twitter's situation. Now there's a whole movement about freedom of speech. Lots of people are like now quite angry with their centralized exchanges, because that's not something, I mean, it's not like something we really believe in when we're talking about the crypto space. We want to have our crypto fully decentralized. We want to take control over our assets and take an ownership over our cryptocurrencies. That, of course, you can't do with centralized exchanges. So lots of people call them evil in the crypto space. At the same time, I still, like, I always bring an argument that centralized exchanges do help people like newcomers to quickly get access to cryptocurrency market with the easier UX, with the easier flow, being able to transfer their money from a bank card into the crypto industry. So there are a lot of arguments about centralized exchanges. And now the whole movement with the freedom of speech is a great marketing opportunity for Binance. So they need to put $500 million worth of investments somewhere anyway. They do believe that Twitter gonna grow and earn them 10% annual, maybe 20%, maybe even 30%, maybe it will even double in their stock price. So Binance betting on Twitter to continue growing in its valuation, especially when Elon Musk came on board. And we know lots of people following Elon Musk investment advices. They always go after like whatever madness. Whenever he's shilling another project, people just throwing money in. So We do expect that Twitter might go up in the price because of this, because of all this situation. Not investment advice. And Binance, in this case, if they're betting on a Twitter price to go up, they want to put like $500 million worth of investments. And at the same time, on top of that, they're getting great marketing, because people see, oh, Binance is supporting freedom of speech. Binance is doing some efforts to also contribute. Binance also in the portfolio along with Elon Musk. It put Binance on all major news. It's also quite exciting, because now people outside of crypto space who are following Elon Musk, they're now learning about Binance. They're now exploring Binance and maybe getting Binance accounts as we speak. So I see it free marketing, a crazy, cool, successful free marketing for Binance, and simple investment opportunity, because they still gonna get return on their investment, and they have this cash that they need to allocate to other projects. Why not allocate it to Twitter when it gives them a larger outcome on their PR level? I think it's quite a no-brainer for Binance. And let's see what else they have to say about it. But just on top, like just thinking from a PR perspective, I think it was already quite a wise decision.
Again, that made me think about things in a whole different way, rather than just like the one way that I was thinking about it, which I was just wondering, they're kind of like, it looks like Binance is backing it, teaming up, and you kind of put a very realistic answer to the question. So thank you for that. But yeah, that's all of the questions for this week in crypto. I think we covered a lot. There's always so many things happening that I think this could go on for like hours, but kind of narrowing it down. But yeah, that's this week in crypto.